Hey there, it's Iggy the Investing Iguana. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with a total of 460,000 reads. Today, I've got a juicy topic for you: Singapore Bank's surprising boost from the federal. Yep, you heard that right. The U.S. Federal Reserve's actions are making waves all the way over here in Singapore. In this video, I'll break down exactly how this is happening and what it means for our local banks. Trust me, you don't want to miss this inside scoop. So grab a snack, get comfy, and let's dive in. First off, let's talk about the big three: DBS, UOB, and OCBC. These local banking giants are expected to report pretty stable earnings for the first quarter of 2024. Nothing too crazy or surprising, but that's not necessarily a bad thing, right? Starting with DBS, it has been a consistent performer over the years. For the first quarter of 2024, the earnings are expected to be stable, continuing its trend of solid performance. This stability is a reflection of DBS's robust business model and its ability to navigate through various market conditions. Next, we have UOB. Similar to DBS, UOB is also expected to report stable earnings for the first quarter of 2024. It's worth noting that UOB has a strong track record of maintaining steady growth rates, which is a testament to its effective management and sound business strategies. Lastly, OCBC is another local banking giant that is expected to have stable earnings for the first quarter of 2024. OCBC has a diverse portfolio and a wide range of services, which allows it to maintain consistent growth and stability. The interplay between U.S. interest rates and the performance of Singapore's local banks might seem counterintuitive at first glance. Here's how it works. Interest rates in the U.S. have a significant influence on global financial markets, including Singapore. When the U.S. Federal Reserve, the Fed, adjusts its interest rates, it creates ripples across the world's economies. This is because the U.S. dollar is a globally dominant currency, and changes in its value can impact other currencies and economies. Now, if the U.S. delays cutting its interest rates, it means that the interest rates remain relatively high. High interest rates in the U.S. can lead to a stronger U.S. dollar. A stronger U.S. dollar can attract investors looking for better returns, which can lead to an increase in the flow of capital into the U.S. So, how does this impact Singapore's banks? Well, Singapore's interest rates are largely influenced by those in the U.S. When U.S. interest rates are high, interest rates in Singapore tend to follow suit. Higher interest rates in Singapore mean that banks can lend at higher rates, which can increase their net interest margins, the difference between the interest income generated by banks and the amount of interest paid out to their lenders. Therefore, a delay in U.S. interest rate cuts could result in higher interest rates in Singapore, which could boost the earnings of local banks like DBS, UOB, and OCBC. It's a complex interplay of global economic factors, but the bottom line is that what might initially seem like a negative development, delayed rate cuts, could actually turn out to be beneficial for our local banks. DBS, being the first runner, will kick off this financial relay on May 2nd. As one of the largest banks in Southeast Asia, DBS has a strong track record of performance. The anticipation for their Q1 results is high, and the financial world will be keenly watching. These results will provide insights into DBS's financial health and its ability to navigate the economic landscape. Next, taking the baton from DBS, UOB will announce its Q1 results on May 8th. UOB, another major player in the banking sector, has consistently demonstrated robust growth and stability. The release of its Q1 results is an important event, providing stakeholders with a clear picture of its financial standing and growth prospects. Finally, OCBC will be the last to cross the finish line, announcing its Q1 results on May 10th. As one of the oldest banks in Singapore, OCBC's results are always highly anticipated. The Q1 results will shed light on OCBC's performance, its strategic initiatives, and its resilience in the face of economic changes. The overall earnings momentum for the first quarter of 2024 might not be as robust as in previous quarters. Firstly, the net interest income, which is a significant component of a bank's revenue, is probably peaking. Net interest income is the difference between the revenue that is generated from a bank's assets and the expenses associated with paying out its liabilities. A bank's assets include loans and investments from which it earns interest. On the other hand, a bank's liabilities include customer deposits on which it pays interest. When the net interest income is peaking, it means that the growth rate of this income might slow down, which could lead to a slower growth rate for the bank's overall earnings. Secondly, the recovery of non-interest income appears to be sluggish. Non-interest income includes revenue from fees, such as those charged for managing a customer's investment portfolio, and from trading activities. It also includes other income from a bank's operations that are not related to interest. If the recovery of non-interest income is slow, it could weigh on the overall earnings growth of the bank. In this scenario, it's like a race between the hare, net interest income, and the tortoise, non-interest income. The hare, having sprinted ahead, is now taking a breather, while the tortoise is slowly but steadily making its way forward. However, it's important to remember the moral of the story: slow and steady can win the race. So, even though non-interest income recovery might be slow, it could still contribute significantly to the bank's overall earnings over time. Wickram MinGa, a prominent figure at Maybank Investment Banking Group, is indeed like a seasoned commentator providing insightful analysis on the trends in Singapore's banking sector. With nearly 2 decades of experience in the field, including stints at HSBC, CLSA, and Credit Suisse, Wickram MinGa brings a wealth of knowledge and expertise to his role. As the head of research for Singapore and the regional head of financials at Maybank, Wickram MinGa is responsible for institutional and retail equity research covering Singapore market strategy, sector, and corporate analysis. He also oversees the banking and financial sector strategy for the region. His insights and analyses are highly regarded in the industry, and he has won numerous awards for his work. In his role, Wickram MinGa has been closely monitoring the performance and trends of the big 3 banks in Singapore: DBS, UOB, and OCBC. He has pointed out that the overall earnings momentum for these banks might be somewhat subdued in the first quarter of 2024. This is due to 2 main factors: the peaking of net interest income, which has been a significant driver of growth for these banks, and the sluggish recovery of non-interest income. Keeping an eye on earnings reports, especially those of local banking giants like DBS, UOB, and OCBC, is indeed a good practice. These reports provide a wealth of information about the financial health and performance of these banks. They offer insights into their revenue streams, profitability, growth prospects, and much more. By analyzing these reports, you can get a sense of how these banks are performing and what the future might hold for them. However, it's important to remember that investing is a marathon, not a sprint. The financial markets are dynamic and can fluctuate due to a myriad of factors. It's easy to get caught up in the short-term ups and downs, but successful investing requires a long-term perspective. It's about building wealth over time, not overnight. Doing your own research is crucial. Stay informed about market trends, economic indicators, and other relevant information. Make sure to understand the risks associated with different types of investments and always diversify your portfolio to spread the risk. Finally, make decisions that align with your financial goals. Whether you're saving for retirement, a down payment on a house, or your child's education, your investment decisions should reflect these goals. All right, my savvy viewers, that's the scaly scoop on how the Fed is unexpectedly boosting our Singapore banks. It just goes to show how interconnected the global financial system really is. One move by the big guys in the US can ripple out and impact us here at home. I hope this video helped clarify some of these complex concepts. If you found it valuable, show Iggy some love. Smash that like button and subscribe to join our community of financially wise reptiles and mammals alike. Remember, knowledge is power when it comes to your money. Keep learning, keep investing, and as always, stay cool, stay invested. Catch you next time.